GM, once at the forefront of the electric vehicle revolution, is now sounding alarm bells. CEO Mary Barra's unexpected warning has sent ripples through the industry as she pulls the plug on EVs, citing an overpricing scandal. In this video, we unravel the unexpected twist that could spell financial disaster for GM and expose the underlying issues plaguing the entire electric vehicle market. Don't miss out on the inside scoop that could reshape the landscape of the automotive industry. Mary Barra's controversial move and the revelations about GM's electric vehicle struggles are the talk of the town. Surprisingly, Mary Barra's latest move might have rescued the company. In an unforeseen twist, automotive titans General Motors and Ford are redirecting their billions from electric vehicles to gas-powered cars and trucks. Facing significant losses, GM and Mary Barra have issued a panic-driven warning, stating, "We're unable to sell EVs and hemorrhaging money continuously. Transition to combustion engines before it's too late." GM recently made headlines by delaying the production of electric trucks at its Orion, Michigan plant. The original plan to launch the Chevy Silverado EV and GMC Sierra EV by late 2024 has been pushed back to 2025. Why? EV pickups are facing substantial rejection from customers, reflecting a broader trend where the initial enthusiasm for EVs in the automotive market appears to be waning. Car manufacturers are currently dealing with an abundance of unsold EVs at dealerships, signaling a shift in consumer preferences. GM, in particular, was overly optimistic that consumers would purchase their cars even with steep markups, leading Mary Barra to introduce a subscription fee for certain car features, an unconventional move we'll delve into shortly. The decision by GM to postpone its EV truck production isn't just impacting the company's strategy, it carries broader consequences for the industry and the labor market. Approximately 1,000 employees at the Orion assembly plant are now being offered transfers to other Michigan plants, such as Detroit's Factory Zero, known for producing the Silverado EV and Hummer pickup and SUV. Some individuals are being laid off without compensation, and GM is incurring a weekly loss of $200 million due to worker strikes. This situation is also pushing another company dangerously close to bankruptcy, a matter we'll explore further towards the end of this discussion. Under CEO Mary Barra's guidance, GM is navigating what might be its most substantial loss to date. The company heavily invested in EVs, autonomous technology, and subscription software, but these strategies are now facing significant resistance from customers. GM's autonomous vehicle unit, Cruise, recently encountered a setback with the revocation of its operating permit in San Francisco, citing safety concerns. Concurrently, GM is compelled to halt its objective of producing 400,000 EVs by the first half of 2024. This shift is attributed to diminishing demand, manufacturing bottlenecks, and profitability challenges. GM is reassessing its approach to revenue-generating subscription services, causing delays in crucial EV product launches, including the Chevrolet Equinox EV and the Chevrolet Silverado EV RST. In a move reminiscent of BMW and other luxury car manufacturers, Mary Barra is now contemplating charging a subscription fee for specific car features, an unconventional approach that raises eyebrows. Despite GM's earlier collaboration with Honda to produce affordable EVs priced under $33,000, the company has completely shuttered this initiative. Why? Mary Barra believes they cannot generate profit from manufacturing inexpensive EVs. With a salary of $29 million, Barra cited high battery costs as a deterrent, making it challenging to hit the market's sweet spot where most people purchase cars. Instead, she prefers focusing on pickups selling for over $1,000, sidelining budget-friendly options. Asked about plans to reduce costs, Barra expressed hopes of lowering battery production expenses, but this isn't anticipated until 2030. Regarding the costs of EVs compared to traditional gas cars or internal combustion vehicles, Barra envisions a considerable time lag before they align, possibly later this decade or even beyond. It's a waiting game in the world of EVs and traditional vehicles. The looming crash in the upcoming EV market is exacerbating challenges for GM. This downturn isn't solely affecting automakers like General Motors and Tesla, but is also reverberating through the supply chain, impacting companies crucial for EV batteries, such as lithium producers. Albemarle, the world's leading lithium company, faced a stock decline due to an analyst downgrade from UBS, prompted by falling lithium prices linked to diminished EV forecasts. UBS analysts highlighted a reduction in lithium demand growth from 30% year-over-year to 22% in 2024, resulting in an earlier-than-expected lithium oversupply. Livent, another lithium technology company, witnessed a downturn in its shares, experiencing a 24% drop year-to-date. Lithium prices in China's spot market have significantly decreased, plummeting below $22,000 per ton, a stark contrast to the previous year when prices exceeded $70,000 per ton. This price slump mirrors the shifting dynamics in the EV market. Responding to this evolving landscape, GM has postponed the production of electric trucks, citing weak EV demand. Similarly, Ford observed a reluctance among US EV buyers to pay premiums over gas or hybrid vehicles, impacting EV prices and profitability. Tesla, too, has halted the construction of its upcoming gigafactory in Mexico, citing global economic conditions. Elon Musk, Tesla's CEO, expressed concerns about high interest rates, underscoring the importance of making products more affordable. This revised outlook in the EV sector has prompted battery manufacturers to reduce lithium purchases for EV batteries. Panasonic, a Tesla supplier, has revised its annual profit forecast, indicating shifts in market costs. The current state of the EV market signals a transitional phase. Despite automakers committing approximately $66 billion to EVs, the actual demand doesn't align with these hefty projections. Nearly 1 million EVs produced this year sit languishing in dealer lots unsold. The sales pace for EVs in the US has notably decelerated, taking about twice as long to sell an EV compared to the previous year. A significant obstacle remains the pricing gap between EVs and their gasoline counterparts. Luxury EVs have weathered the storm better, catering to an affluent customer base less affected by price hikes. However, for the mass market, EVs remain excessively costly. Even Tesla, a pioneering force in the EV market, had to slash prices to sustain sales volume, implementing cuts as deep as 30% this year. Consequently, the company's automotive gross margin has dwindled, hitting its lowest point in over 4 years. Ford's electric vehicle unit, Model E, reported a considerable operating loss, with the company anticipating billions in losses on EVs this year. Sales of Ford's Mustang Mach-E have experienced a sharp decline, prompting the company to scale back production of this vehicle. Despite an overall uptick in EV sales, these figures are overshadowed by the surge in hybrid vehicle sales. The trend reveals a preference for hybrids over EVs, and this reality is hard to ignore. Mary Barra, facing the challenges, sees one viable path to save GM from decline: a return to their decades-long successful strategy of manufacturing combustion engines. Joining forces with GM, Ford's Jim Farley is also pivoting away from EVs temporarily to focus on producing more internal combustion vehicles, safeguarding his company from potential downturns. GM is making a strategic shift by investing over $2 billion in plants dedicated to new combustion engine vehicles. They plan to enhance their Arlington, Texas plant with a $500 million investment to prepare for future IC engine SUVs, including iconic models like the Chevy Tahoe, GMC Yukon, and Cadillac Escalade. The emphasis on combustion engines aligns with the demand and financial considerations. GM's heavy-duty pickups, such as the Chevy Silverado HD and GMC Sierra HD Denali, experienced robust sales, reaching nearly 288,000 units in 2022, a 38% increase from the previous year. GM's investments are methodical. For example, the Flint assembly plant is receiving a $788 million infusion for new IC heavy-duty trucks, involving the expansion of the body shop and the addition of new tools and equipment. The Flint Metal Center is also undergoing a $233 million investment in new stamping dies for these trucks. The shift toward combustion engines doesn't signify a complete abandonment of EVs by GM. They remain committed to their EV plans while acknowledging the enduring appeal of big, powerful trucks and SUVs in the US. It's a strategic balance, embracing electricity for the future and combustion for the present. The takeaway? GM is making informed decisions, investing in what resonates with customers while keeping a keen eye on the future of EVs. It's a delicate balancing act, but GM is demonstrating their ability to navigate it. This move indicates that combustion engines, particularly for beloved larger vehicles, remain a significant part of the automotive landscape. With GM's strategic shift, there might be renewed hope. The question is, does Mary Barra possess the capability to steer GM away from decline? Should GM completely abandon EVs in favor of gas-powered cars? Share your thoughts in the comments below. Subscribe for more content.